we have been range bound again, just like we were weeks ago, stuck in this range on the Dow. Are we going to break out to the upside or the downside? Hopefully by now you know. But even if we've broken out to the upside or the downside, what should you do now? Should you be waiting to buy to go higher in the market? Should you wait to see if the market's going to go lower before you short stocks, before you buy puts? How can you know how to profit in this market environment? I want to get into that in this market analysis. Here's a quick disclaimer. All right, thanks for joining me. This is a market update for February 8th, 2019, or the week ending in February 8th, 2019, Friday. I'm actually recording this, if you look at my screen, on February 7th. It's just because I won't be able to make this video for the 8th, and so my charts will reflect the market as it sits at the close on February 7th. However, from a macro perspective, it's not going to make a whole lot of difference in what I'm talking about. So I'm going to start off with the Dow Jones Industrial Average. We're going to start off at a macro level, looking from the top down, looking at the weekly chart, and I want to point out a few things here. One of the first things is that we have continued to creep higher. We've continued to put in higher highs on smaller time frames, and the market seems like it does not want to go down. Since Christmas, the market has continuously just climbed and climbed and climbed, but I want to look at the big picture of the markets and see what we can kind of pull out of the information that we can see. And so if I come in here, I have some trend lines drawn already, but I'm just going to draw a couple of more just to make a point. Here are the highs that we saw back in the end of September, and then we had the fall in the beginning of October of 2018. And what I want to point out is that we broke previous lows. So we have this trend that's been going on for years, really, since 2009. But we have this low here. And you can see a low here and a low here. And we have a series of higher lows, meaning that the Dow is definitely in an uptrend. And what we were able to do is break below the previous higher low. And so what we did was we put in a lower low. So this is where we entered into the bear market being defined as a 20% correction in the market. And since Christmas time, we've pulled straight back up. We thought the market would reverse here. We thought the market would reverse here several times now. And we entered into earnings season. Things continued to climb, and the market has just not stopped to take a breath. But I want to point out very specifically that until we actually break above this recent high over in September, we will still be in a downtrend. Okay, so there's very much a possibility. I'm just going to cut this part of my screen out so that I can draw on it. There is very much a possibility that we change the color here just so we can see it a little bit better. Turn over and break this previous low and continue the down move. Now, when will that happen, and can that happen, and how will we know if this in particular is happening? And that's what I want to talk about. I want to get into some details as far as what we can look at on the charts to be able to figure out, is this actually happening, or are we going to enter into a situation in which we have a small pullback. We have a small pullback that looks something like this, and then we continue higher going forward. This is another possibility where we just continue, just have a small pullback, finding support, and then continuing higher. The charts will tell us in real time what is happening, and if we understand all of the possibilities, we know how to react to the market moves and the market momentum. So I want to go through just a little bit about where we are, what is most likely to happen, and then how to respond in an either-or situation. So let's clear this out right here. Okay, so looking at the Dow, I've already pointed out very specifically what I wanted to show you on this chart. So I want to break down. We always look at higher time frames first and then go down to the smaller time frames, because there's never going to be an instance where a 10-minute chart per se is going to lead or direct a 1 hour chart. All right, so the smaller time frames will always be doing the bidding of the larger time frames. And so the larger the time frame you look at, the more power it has. However, there's a lot of ebb and flow that can exist inside of every single candle. So looking here at a weekly chart, if a weekly chart has 5 daily candles within a single weekly candle, and it will have 10 4-hour candles. And so there can be 3 down candles for a 240-minute or 4-hour chart, and 7 up candles, which makes a green weekly candle, and that's reflected historically as a green weekly candle, but there were 3 candles of red on the 4-hour chart. The point is that the smaller the time frame, the less clout it should hold in your analysis. And so you always want to start from the largest time frame and go down. So here we're starting with a weekly. I've pointed out some very specific things on the weekly, but in order to get a finer picture, a more granular picture, we want to zoom in. All right, and so imagine looking at Google Maps, how you look at the aerial view, and then the closer you zoom in, the more detail you can see. That's what we're going to do here. So digging into a daily chart, I'm going to get rid of this line right here. All right, so the first thing I want to point out is that ever since we came and put in these lows around February of 2018, we were in an uptrend. I've drawn these lines so that you can see the price movement trending upwards. So we trended up, we pulled back, we put in a higher low here, we went up, put in a higher high relative to this high, higher low, we continued up, and then all of a sudden, as I mentioned, as we saw on the weekly chart, we started falling in October. We pulled back, we put in a lower high, we fell, we pulled back here, we put in a lower high, and then we fell, and now we've pulled all the way back to where we are currently sitting. All right, and so just the same as the weekly chart, we have not broken above these previous highs. And we have these range-bound indicators. This is a stochastic slow indicator. And what this indicator is showing right now is a very overbought situation. However, we've been overbought since 1/11/2019. If you go back to some market updates I did previously, I was looking for a down move to occur right here around 125, 128. I was thinking the market would pull back. It didn't. It found momentum and it continued to climb. Does that mean I lost a tremendous amount of money? Absolutely not. That does not mean that I lost a tremendous amount of money. And I'm going to get into how I was able to see what was happening as it was happening and adjust my trading strategy. So I'm going to talk about that a little bit later in this video. But right now, just looking at this, we have continued to go higher. So what we've done is we've made an overbought situation even more overbought. I don't know if that's the right way to say that, but we have a potential bearish divergence that exists right here. And that exists because this high is higher than this previous high. This high is higher than this. However, this indicator is not tracking as high as it did previously. Okay, so right here we have a potential bearish divergence, and we have a MACD that is wanting to, not quite, hasn't quite, but it's wanting to cross on the downside. It'll turn red when that happens. Previously, you can see on this indicator, if it goes green and then it turns red, that's the start of downward momentum, okay? But we need to look at multiple time frames to really try to figure this out. So what we're going to do is we're going to zoom into this price action right here, this recent up move since December 25th. Now I can just zoom in using a zoom tool, or I can take this daily time frame down to a 60-minute time frame. And so what we're seeing here, I'll actually put a little bit more history on this so that we can see a little bit more of the price history. Okay, so here is the down move that existed all the way till Christmas, and you can see that since Christmas we've been trending higher, higher, and higher, and higher. Back here is where I thought that we might turn a little bit lower. We were putting in a double top. Okay, we were putting in a double top, and we talked about that, and I thought that we would move lower. Okay, so but let's talk about how we would have known that it was time to buy puts, or it was time to short the market, or to sell long positions, depending on what your market strategy is. To do this, I'm going to actually change the date. So right here we can see all the way to February 7th, but I'm going to change the date back to January 28th. And so the chart's only going to show all the way to January 28th, and anything past January 28th will no longer exist. I want to show you how we could have known that this move right here was not going to continue down. The reason this is important is because we're in a similar situation right now, and I want to make sure that everyone is aware. All right, so right here, what I'm going to do is this time I will actually zoom in just to show this a little clearer. All right, so this is what we were looking like on January the 28th. And I want to show a little bit of space to the right side of the chart. All right, good. And this is what we were looking at. We had a series of higher highs and higher lows. And what we needed to see in order for this trend to be reversed is we want to see a break of this low right here. This was the low we were waiting on. So either we were going to come in, find a base, put in a higher low relative to this low, or we would have broken down further, which would have been an indication that a down move had started. Okay, so what we would have wanted to see in that situation is we would have wanted to see the price come down and break this line right here. All right, so this is the previous low, and we wanted to see price action come down and break this previous low. That did not happen. Okay, so how would we have entered a trade if it had broken that previous low? Well, one way to do it is to just enter a trade right here. Okay, enter a trade as it comes down. It's not how I trade, but another way is to come in, it breaks this previous low, it ebbs back up, puts in a lower high relative to this high, and then you enter the trade right here as the trend begins down and down and down. Okay, so that's where you could have entered the trade. The minute that we break this higher high here, this area, the minute that the price breaks that, we are continuing the uptrend, and that's how we know how we should respond. So if I go back and actually show what happened, you're able to see strong earnings came out, a number of different things came out about the economy. There was a Fed report, and the Federal Reserve said that they weren't going to ratchet up interest rates as fast as some people thought they would, and all of a sudden we broke this high. So at this point in time, we are in a new high relative to this previous high right here, and we are going to continue the uptrend. There is no need to be buying puts, shorting the market, or selling your long positions just yet. All right, so we were range bound for the longest time. We were stuck in this channel, and we broke out to the upside. Now, again, I wouldn't buy there. I would wait on a small pullback, and then I would enter into a trade, okay, which is what we received right around here. And so if you would wanted to enter a trade, you could have traded from here to here on the Dow Jones. Now, the different stocks reacted in different ways, but this is how it would have worked on the Dow. Okay, so all of that information to get to where we are right now. We're in a very, very similar situation. Let me zoom into the current price action and show you where we are now. Here is the previous higher low. See this low? I'm comparing it to this low. This one's higher than this one. Okay, so we're still in an uptrend, and we're in this exact same situation. It is literally mirroring what we saw back here. Okay, so what we want to see is, are we going to break lower below this support area at around 24, no, we'll just call it around 25,000. It's around 25,000 on the Dow. Are we going to break lower than this, or are we going to break out to the upside? Okay, there's opportunities to trade both. However, you'll probably have to do it on a small time frame. Let me zoom in here on we'll do a 20-minute time frame. See here on the 20-minute time frame, you'll see there's more opportunities to trade. You're just zooming in more and more and more. Okay, so here on the 20-minute time frame, we've come down. We're putting in a lower high. Our indicators are going up, and they're about to be in an overbought situation again. Now, what is going to happen on Friday, February 8th, and what's going to happen next week? Well, I don't know. You know, I don't have a crystal ball. I don't have the ability to 100% predict the market, but I do know how I will respond. Okay, so let's talk about scenario one. Scenario one is that maybe we go a little bit higher, and then we break below this area. And what we want to do is we want to see a strong close below this area, a daily close if we can. All right, once we have that, Then we want to take a smaller chart, such as this 20-minute or a 1-hour chart, or I was showing, I think, a 100-minute chart a second ago. We want to see a pullback up to overbought area that is lower than this previous high, and then we are going to purchase right there. Purchase puts if you're going to long a position. I wouldn't purchase stock. I'd be shorting stock in this position and trading it to the downside. Okay, that's one scenario. The second scenario is that we can do a number of things here, but we eventually break above recent highs. If that happens, we break above recent highs, then we're going to wait on a move, a pullback, and then we'll buy going to the upside. See, in that way, we end up going in the right direction no matter what, but we have to pay attention to these key support and resistance areas. And those key areas here on the Dow are the recent highs that were placed in around February 6th, yesterday, and the lows that were placed at the beginning of February 4th, which was this past Monday. So we want to see what's going to happen. And I think by the time that you end up watching this video, we may have that answer already. So how you should respond is you would wait until Monday morning, Tuesday of next week, and you would see how you should best enter the markets. Pretty much every index is set up the same. If I come over to the SPY and I come out to, say, a daily chart, we're in a very similar situation. The indicators are almost identical on every single index that I can look at. Here are the Qs. It's just it derives its value from the NASDAQ, and so we're looking at tech stocks and things like that. It's really, really similar. So that's what I am looking at. There's really not a whole lot more to say. You know, I talked a couple weeks ago about how we can look at the Treasury market, that the fact that fixed income securities, the bond market actually moves inversely to the stock market. Now, the bond market is showing a lot of bullish activity. Why do I say that? Well, because we put in a recent high that was higher than the previous high. Again, I'm going to grab the screen here just so I can draw on it. But you see, this was the previous high, and this is the recent high that was placed. Okay, whenever I did the video talking about the actual bond market, we were right about here, and I was saying that the bond market looked as if it should trend higher. So we have this low, and then we were putting in a higher low. You see this higher low right here. And so my point was that we will eventually move higher, and when that happens, historically, not always one-to-one, not on the same exact day, but historically that leads to a decline in stock prices. Here we actually had a day where the bond market went up in value and the stock market did too. That doesn't always happen. The point is that things always come back to an area of homeostasis, sorry, I can't talk, or equilibrium. And so my point is that we have a trend line here. Trend line has not been broken. Every time we try to touch this trend line, the market goes higher. If I break these charts down the same way that I did the Dow Jones, looking at it from a macro level, there's definitely a downtrend here on the weekly chart when we look over a period of years. Okay, but we have a bullish divergence set up to the upside. If I come again to something that would affect the future a little bit, closer in time, then I'm looking at a situation where we broke, the recent high. So we had this, we were putting in lower highs for a long period of time, and then all of a sudden, boom, we put in a higher high. And so the next thing is the next low going to be a lower low all the way down here, or is it going to be a higher low? Well, it was a higher low. So the next thing that comes in that progression is a higher high. And so for a higher high, we have to break this high. So that's the next logical conclusion, is that we should put in a higher high. So that should be somewhere up in here. So as we look to the future, that should manifest itself. That should be what is next. And so that's what we're paying attention to. I think that the market will adjust to this as the bond market creeps up here. I think that we will see that reflect in the actual stock market. I'm going to go back to the SPY, right, which is just the S&P 500. I think that we're going to see a little bit of adjustment. Now, however, Again, we're going to look at that channel. We're going to look at this channel right here that we were able to very clearly see on here I'll just go to like a 15-minute chart, or it's a lot clearer on the Dow. Alright, there we go. So we're going to look at this channel. We're going to see if we break out to the downside below 25,000, or if we break the recent highs that were about 25,432. Right, that's going to determine what we do in the coming week. However, you know, if we break to the downside, let me get to the daily chart. If we break to the downside, I'm not sure how far we'll pull back. Again, it's the same rules that apply over and over again. If we pull back and we put in a lower high relative to this, then I would say that we're going to go higher. We're going to continue up in this bull market, and we're going to retest, you know, recent highs here and then recent highs here, and we're going to see if we can break those. And if we can, then we might come all the way out to the weekly chart and find that we broke that, and then we're going to pull back. We're going to put in weekly highs that are higher than previous weekly highs, and we may be in another bull rally to the upside. So those are the things that we are watching and waiting for. That's the overall market update. If I were to just go through and say this is what the stock market's doing. First, pay attention to this channel. What side are we going to break out on? Once we break out on a side, wait for a pullback and then trade in that direction. I would trade very cautiously to the upside though, and I would only take advantage of those moves on small charts, just because these larger charts are maxed out on all of their range bound indicators. So be very cautious of that. If we're trading to the downside, pay attention again. We want to see a series of consecutive lower highs and lower lows on the smaller time frames. If we break out to the downside, we want to see those kind of trending down just like this. Very cautious though, because at some point we may find a bottom, especially once these indicators digest on a daily chart, and then we would have the opportunity to turn and then move back to the upside. If the down move is not very violent and the bears, you know, are not very strong, we could see bulls come back into the market, institutional investors buying up stocks and driving higher into 2019. So that's what we're looking at. That's what we're paying attention to. Always refer back to the bond market. Pay attention to that 20-year Treasury yield, and trade stocks that move with the market. If the market's moving down, trade stocks that are trending down with the market as well. If the market's moving up, find stocks that are doing the same thing. Don't fight the current. Don't try to paddle your boat upstream. Go with the flow. All right? If the market's going up, trade up. If the market's going down, trade to the downside. All right, that's all I have. Hopefully, by the time you're listening to this, we'll have broken out of this channel and Friday wasn't just a dud of a day. And hopefully by now, if we've broken out of one side or the other, you'll know how to respond in the coming week. And I hope that this leads to more profits for you. And I hope that you have a very profitable and successful week next week. All right.